Welcome back to Fair Fade Investing. Today we're taking a look at Coinbase Global, ticker symbol COIN. We've got price per share of $200, a market cap of 48 billion, enterprise value of 45 billion, and a price to earnings of 557. Looking at the financial strength, we see cash debt ratio of 1.91. So for every dollar of debt, they have $1.91 of cash to pay down those debts. So just about 2 times their debts in cash. Looking at their profitability, we do see high gross margins here, 86% versus the industry. This is one of the best in the industry. And in relation to their historical performance in the last 10 years, we see their lowest was 80, current 86, and the highest of 89. The rest of their margins appear to be fairly low, although strong free cash flow here. Although versus history, all of these margins appear to be fairly mediocre. When we look at the price to earnings, we see that current of 557, and versus history, this is just about the highest they've had in the last 10 years, with a median of 28. When it comes to the trailing 12-month revenue, we see they have $3 billion in revenue versus that market cap of 48 billion, leaving them with approximately 26 times their trailing 12-month revenue. Looking at the financials on a trailing 12-month basis, we see revenue and net income increasing steadily here in 2021, and then decelerating from 2022 onward, and then slowly accelerating back in the most recent quarter. We do see their cash to debt fairly linear with the debts slightly decreasing over time, and we do have that cash pile steadily outpacing their debt. We do see significant share sales here, but to get better insight, let's run a DCF. So in the DCF, first thing I'm noticing is that there's no business predictability. Very hard to predict this business. There's no data for the earnings per share on the 10 and 5 year, and there's a deceleration in the 3 year. For free cash flow, again, there's no data on the 10, 5, and deceleration in the 3 year. So it's going to be fairly hard to evaluate, but let's see what's currently priced in. So currently for Coinbase, there's about 70 to 71% growth for earnings per share priced in for the next 10 years. So every year to grow at 71% earnings per share for the next 10 years, a fairly high valuation. But let's switch over to free cash flow and see. So back in free cash flow here, we see that for free cash flow, there's about 30% priced in for the next 10 years. So clearly high amounts of growth priced into the business. With a price to earnings of above 500, you know that you're buying a business with a significant amount of growth priced in. This company is going to need to execute very high growth just to be fairly valued. The room for upside does become a little bit less likely just because of how highly valued this company already is based on what they're earning. Again, they have high gross margins because this is a digital service sort of business. If you like this type of video, please leave a comment, subscribe, leave a like, and I'll see you next time.